It sounds confusing, basically, the Siemens deal. Walk us through what that would look like for Alstom.
Yeah, and we're already getting feedback from Alstom that the GE deal is very clear and very concise. It's $17 billion for roughly 75% of Alstom. It's the energy assets. It's clear what you're getting and what you're selling. Here,
whereas
with Siemens, yeah, it's you can call it complicated, you can call it complex, confusing, whatever. It's cash. It's some assets being contributed from Siemens. There's a bunch of joint ventures. You'd have to break up some businesses into different pieces. Gas would go one place, steam would go another place. The French government would have to put money into the deal as well to make it work.
So the advantage that it has is that, of course, that Siemens is a German company, but you're also talking about a Japanese company, so non-European. I mean, how does that fare, say, versus a U.S. company like GE?
Yeah, I guess you could make the joke that there's probably a World War II soldier rolling over in his grave that the French have chosen a German-Japanese bid over a U.S. bid. But I think I will just say the clarity usually usually helps a company's bid. Sure. And if you're a shareholder and you're a board member at Alstom, you're saying, I know exactly what I'm getting. Right. I might use this as leverage to squeeze more out of GE, more money or more job guarantees, but I know what I'm getting.
Are the job guarantees going to get them there, Marshall? What do you think? Does this still happen?
I think it helps. I think in addition to Jeff's irony about, the national origin of these bidders, there's another irony, which is in some ways the French government has become an investment banker. I mean, you have CEO after CEO now lining up to go see the French government, the French parliament. They're going in there to make their presentation, their PowerPoint.
Yeah.
And they're now consumers of complexity, because when you have two bidders teaming up, exactly as Jeff said, you get a lot of moving parts. There's some joint ventures. There's some minority interests. There's what are we going to do with rail? There's all those moving part issues, whereas GE had a very clean, simple transaction.
But, you're GE. Why do you want to even be dealing with that? I mean, why do you want to have to go and say, I guess. I mean, but, you've got the headache of operating a business in France then, which means you're right. You're going to have to talk to your French investment banker, Mr. Hollande.
GE loves France. They got 11,000 employees in France, and I think that this is becoming all very French right now, and I think they're being pressed harder and harder to raise the price a little bit, but also raise the assurances on employment.
And David, part of this too is the whole offshore, keep your money offshore rather than bring it back here for tax reasons.
It is. I mean, that's a piece of it, and I do think that politics is going to have a major role in this. The French president has already said he's going to be the final decider. It's not purely a normal market transaction. So it does have hair on it even before you get into all of the complexity.
I mean, acquisitions are hard enough if you are GE or you're an acquirer and you're trying to negotiate with the board and the shareholders of the company, your target company. But now what we're saying is you've got to negotiate with the French population, the French government, and it's not like the French government and the administration all marches forward in the same direction. Our sense is that Hollande feels one way and there are other members of the cabinet that are more skeptical or less skeptical of GE. So talk about throwing even more complexity into what is already a very difficult and challenging situation.
Let's move on to Medtronic, because this is just huge. $42.9 billion. What does it get them?
So there's a couple things going on here. There's two quirks in the tax code. There's the inversion element where you can lower your tax rate by moving offshore. Medtronic gets a little bit of that, though they had already kept their effective tax rate low. But the bigger deal is they have all the offshore cash. They have somewhere between $13 and $14 billion in offshore cash, and they can now access that. In fact, they can use some of it in this particular transaction.
Why is it becoming so much about taxes? I mean, have we reached a tipping point? It seems like so many deals lately are being done for tax purposes. I mean, maybe strategic as well, but there's a tax element to all this.
There is a tax element to it. In this case, as you pointed out, it's not as big a difference as it would have been in, say, the AstraZeneca transaction. The effective tax rates are closer. I think it's driven more by the ability to get at that offshore cash. But there's also concern that there's legislative changes coming down that may make that kind of inversion.
I mean, that's really, I mean, I think a lot of companies are fearful that Congress is going to come out and say, you know what, you're going to all get taxed no matter where you're operating in the world at a particular rate, at the U.S. corporate rate. And even if we decide to make it lower, it's still higher, than many of these places, like Ireland, for example. Or in this particular case, we've got Covidien, which is going to be at a rate of what?
It's closer to like the 18 to 20% rate. Now, again, Medtronic's, I think, kept in the 18% rate already.
Well, the rates that the Wall Street Journal quoted were actually more diverse still than that, Jeff. It was 12.5% in Ireland. And Ireland's often, for many periods of time, been a tax haven jurisdiction for corporates. And 35%, of course, is the marginal corporate tax rate here. There's another thing going on here also, which is the use of stock. Everybody's talking about inversions, and you're 1,000% right, Chris, that Congress at some point is going to shut this down. Trish, Congress will shut this down at some point.
That's okay. Chris is over there.
That's right. I know who you are. Yeah, we'll shut this down. But in the meantime, watch the consideration package in several of these deals. There's a lot of stock. Just like Valiant, which had the chutzpah bid, as I call it, a lot of their stock. There's a lot of stock in these deals, and a lot of that is about using stocks that have been propped up by cheap money in the equity markets as an acquisition currency.
Well, I mean, go back all of a few months ago, which seems forever ago because there have been so many transactions, but when Facebook did the WhatsApp deal, it was noted to us over and over by people who worked on the transaction. Mark Zuckerberg realized he had a very expensive currency, a very
valuable
high-running currency in his shares, and he made sure to use as much of that as he could.
Right, you might as well. I mean, while you can. I mean, for
Absolutely.
sure. But, you know, back to the tax issue, I would just say, why aren't we doing more to create an environment where companies want to be located here, like in Ireland? Why are we sending companies overseas?
I think companies do want to be located here, and I think there's a zillion reasons. They want our graduates for R&D. They want our markets. We have the biggest market in the world. The question is, why does it take Congress so long to fix what is clearly a tax loophole? And some of that is about Washington, and I think ultimately will get fixed.